China and Russia are ditching the US dollar. In previous years, they had been discussing this but not actually implementing it. Since the financial crisis, it seems that they are stepping up and actually arranging deals with several countries and doing away with the US dollar. This has taken several years and it will take many more, but the point is very clear. Russia and China want to dump the US dollar. But will they accomplish their goal? You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened with China, with Russia. We're going to talk about India. We're going to talk about Rothschild. That's right. Stay tuned for a jam-packed episode, beginning with this out of RT. Russia's Ministry of Economic Development said that Moscow and Beijing are working on an intergovernmental agreement to boost the use of the ruble and the yuan in mutual trade settlements. This is very direct, this is very precise, and they know exactly what they're doing. This isn't something that you heard that maybe they're going to do and maybe they should do it and this would be wise, and it's coming from some analyst at some bank in one of these countries. This is actual talk about how they are escalating the issue and they are making it known. The document is currently being prepared. The process is not easy. Russia and China have had some experience using national currencies in bilateral trade. Okay, so we know that they have done this before. They are working on it already, and they have been doing so for a little while now. All right, Russia and China have been successfully implementing their terms of their ruble-yuan currency swap agreement, clinched in 2014 to boost trade using national currencies and eliminate the dependence on the dollar and the euro. The deal was extended at the end of 2017. So when you have these currency swaps that are set up, which I've covered before in many other videos, they have to then agree. And usually what I've seen is when they agree upon these new deals, they end up extending them further. They end up expanding them. The deputy minister didn't provide any information on when the new document will be signed. And of course, this is the way it works. They go back and forth, they negotiate, and things have to happen. All right. So they're talking about the trade that they're doing between the two countries is mutually beneficial to them. They're expanding their trade. And of course, they are becoming the best of buddies. There's no doubt. China is Russia's largest trading partner, accounting for 15% of Russian international trade in 2017. The countries expect bilateral trade to hit 100 billion this year and plan to steadily boost it to 200 billion by 2024. This will expand and will become something that these countries will, as I said before, mutually beneficial agreements, not one side winning. Okay, that's not what's happening here. China and Russia are both benefiting from the trade that they're doing. What I wanted to highlight is right at the bottom over here. Last year, 9% of payments for supplies from Russia to China were made in rubles. Russian companies paid 15% of the Chinese imports in yuan. So we have a growing number of trade being done in either yuan or rubles. So expect this to continue as the years go on. Is it going to be next year that it's going to be 100% of the trade? Absolutely not. Is it going to be 5 years from now? Probably not. Is it ever going to be 100%? I don't know. But what I can tell you is that they've been increasing this. And if we come back 5 years from now and look at the statistics, we're going to see that, oh, they've really increased since then. If we look 10 years from now, it's going to, wow, they really increased since then, and so on. So this is just going to get more and more close together. These two countries, obviously geographically, they are correlated, but economically, every day that passes, they're more and more connected at the hip, that's for sure. So here, it basically says 3 years ago, those numbers were 2% and 9% respectively. So you could see that the trend is there. That's all I'm trying to point out. Now, I brought this issue to you back in June. India and Russia weigh rupee-ruble trade for defense deals. Then this article just came out this month, October 2018. Putin in Delhi, India, Russia revisiting the rupee-ruble arrangement. Basically goes through how they want to do away with the US dollar and they want to do business in between their two currencies. Now, India was a little bit hesitant initially because of the ruble devaluing, but hey, the rupee's devaluing as well. And it's devaluing against what? against the US dollar. So that's when they have a mutually beneficial agreement between the two of them. They could say both of our currencies are weakening against the US dollar. Why not do business together? Okay, so that's going on with India, with Russia, with China, three big countries, obviously located geographically together, but they're doing a lot of trade together as well, and that's expanding. Pakistan, China extend currency swap agreement by another 3 years. This was back in May, but I'm just showing you an example of yet another country that is doing these currency swaps and extending and expanding them. This is what happens every time. I've shown you, in fact, there's a Wikipedia article that was tracking it. I don't know if it's up to date now, but the last time I checked it was. They're showing you all the different currency swap agreements and the value that it represents. And it just basically, all of them related to China, that is. And you'll be surprised the countries that you see on this list. It's not just Russia, for example. We're seeing it basically all around the world. Now, the amounts tend to vary depending on who it is. But it's very interesting to me to see a lot of these countries that are doing a lot of business with the US, and they're willing to do business without the US in this regard. So be keeping your eye on these. Another country, Nigeria, China agreed 2.36 billion currency swap agreement. This is yet another country. China obviously is very, very big partners with Africa in many respects. And you could see that they're expanding their business there. They are engaging in these currency swaps. There's all kinds of different business that's happening in between the two. There's infrastructure that's taking place. China's building it and so on. These, right out of the CFR's website, actually, it shows on a graphic, you could see the lines, and that's the currency swaps that are taking place with China. And look how many. I mean, it's pretty much everywhere, including Canada. There's, basically all over the world. Yes, they're tending to focus on areas of Europe and Asia and so on, but it's going everywhere. And as the years go on and as they become a stronger currency, become a stronger economy, I think this is only going to get more and more and more pervasive. So look at that. I think that's important to always check out when you hear about currency swaps. You see an article about it, keep your eyes peeled, okay? Now, Rothschild, we all know about Rothschild, and I covered this before, but essentially RIT Capital, they are part of the banking dynasty, just one part, that's the public part. Here you can see Rothschild RIT Capital Investment has a historically low 47% exposure to the stock market. The banking dynasty is concerned that the 10-year stock market rally could be ending. The cycle is in its 10th positive year, the longest on record. We are now seeing some areas of weaker growth emerge. Indeed, the IMF has recently predicted some slowdown. That's according to Rothschild himself. Now, the reason I mention this is that we are going to have a downturn at some point. Maybe it's next year. Maybe it's 2020. Maybe it's 2025. I don't know. I really don't know, okay? But when it does happen, out of that, they are assuming, a lot of these analysts are assuming that we will have a new world order that emerges. And whether or not that's going to look anything like we have today, we don't know until we're sitting in it. So we're going to see a country like China perhaps having stronger relationships and stronger economic factors than they do today. They can grow out of this faster than other countries can. And other countries in Europe that are already struggling with a deflation, they're going to be hit so hard in the next crisis, it's not even funny. The way that it's going to hit them is going to be like a smack in the face, and a country like China or perhaps other emerging markets out there are going to be able to grow out of it faster. They're going to be hit hard, there's no doubt. All countries will be hit hard, but it's that growth out of it. And what a lot of these economists and analysts are suggesting, that the new world order will emerge, and one with China at the helm. I'm not saying anything about it. You take what you want from it, but that's essentially what we're getting at. And that's all I'm trying to do is analyze the data that I'm seeing today. And as new information comes out, then sort of put it on the put it down and sort of map it all out for myself and try to figure it all out and connect the dots and so on. So that's all for this video. If you found it informative, please give me a thumbs up, and give me a thumbs up. It helps to support this channel, so I do appreciate that very much. All right, now, if you want the financial education that you were not taught in schools, that was kept from you, that information which is keeping you from knowing what's really going on, well, then all you have to do is read these 2 books, very simple, very short books, and they will describe everything you need to know, all the way from the foundational principles. You don't need to know anything about the finance industry, and if you do, it's just a bonus. But you take this information, and then you could manage your own money. You can, even if you don't manage your own money, you could take the questions you have to your financial planner, advisor, or whatever, and ask the right questions. If you prefer the audiobook version, you can get that at themoneygps.com.